Hey everyone, welcome back to the channel. Taking a quick look here at the obvious data here, the reason why Bitcoin is dumping, 0.9% increase there for PPI data, essentially telling us that we're seeing inflation from the tariffs as well as the fact that it starts on the producer side and inevitably becomes the consumer. So we're going to discuss kind of what those ramifications mean for us here. We've also got a rising wedge pattern forming on the 3-day charts. This bearish divergence we've talked about for RSI, as well as a comparison analysis of the coins we're covering today, and obviously a quick dive into dominance and the CME futures, which we can see majority of the Bitcoin CME futures has been filled. This is awesome stuff. In a lot of ways, we could very well pivot and bounce here soon. We'll talk about that and much more here. Stick around. Before we jump into the charts, just want to quickly highlight a nice deposit reward bonus and future trading rewards here from Bitunix. There's no KYC or VPN required, and this is available between now and October 30th. Furthermore, if you want to bolster your knowledge and become a better, more consistent trader, we've got a trading academy, community, and signals group. Link down below for that, CryptoCache.tech. All right, folks, let's go and start with the obvious stuff here first and foremost before we get any further into the charts. Just to quickly look at the crypto market overview. What happened on the back end here when it comes to the overall situation? First of all, fear and greed index hasn't been impacted much at all here. This is actually kind of good in a lot of ways based on the simple fact that we're not seeing people, getting shaken out of their positions, so to speak. It's that natural capitulation from the all-time high that was broken here recently. I think we hit upwards of 124,500. We'll look at those specific numbers here shortly, but altcoin season index is still looking strong here because we can see even though we are pulling back on the market capitalization dominance here, essentially 1.65 trillion down from 1.71 or 1.72, we can see that we're still in that good area, that good range, and majority of altcoins are outperforming Bitcoin outside of some outliers, of course, that we've discussed previously to avoid, obviously, trading. Furthermore, too, derivatives, if we look here, open interest is still high. Usually when open interest remains high and the price comes back down, it implies sustainability and strength and the price likely to bounce and recover from here. I wouldn't say we're just instantly going to bounce back, but that is something to be mindful of. To touch on some back-end data here, to kind of give you some perspective, first of all, just kind of more macro structure stuff here. On the 3-day time frame, we do have a rising wedge. This is actually similar on larger time frames and smaller time frames, essentially telling us that we're due to break down further. That's just kind of a pattern that's forming. It doesn't mean the price is going to do so, but we're going to keep an eye on this ascending trend here, and if we lose this 117, 116K range, we may want to consider a different structure. But the key takeaway here is that even though we have divergences on the MACD, we're not seeing a tremendous amount of volume to the downside or that precipitation, so to speak, and that is really just kind of fizzles out the concept of seeing that divergence. So if you're attaching yourself to a hidden bearish divergence, we're not really seeing that here based on this time frame. Even if you look at the weekly here, we have an RSI divergence. This takes a while to play out. Okay, so weekly time frames, each one of these candles is a full 7 days. So you got to recognize that even though we may be starting to see the price, top out, so to speak, we're also in a situation where this is not dire straits by any stretch. We could very well continue higher. Keep in mind, I think the obvious fact of the matter is here that 150, 200K Bitcoin, I think that's less likely on this next push up if there was one, but we can see a pretty obvious resistance here as well, roughly that 120K range. So once more, closing above 120 on the weekly, I think would signal a further upside. Closing below, we may actually see that rising wedge pattern start to unfold here. Taking a quick look here at the main coins here, just quickly at a glance, we're looking at these 5 coins. Bitcoin on the left-hand side, showing that we rejected off our all-time high effectively. Yes, we wicked up, but we didn't really close above that level, at least not by much. It's like a couple $100 difference. So the truth is that's still a resistance for us. 123,000 is a round number, is that resistance for Bitcoin. We can see we broke through our local resistance for Ethereum, and we may see a bullish backtest of 4,400. That's an area I'm interested in considering a long position, because there is confluence there. I'll explain more so later on that. Solana also, furthermore, looking at a continuation lower. 185 is that local support. Basically 201, 203, that range there is that local resistance. While yes, we again did close above that in the 4-hour, I don't believe the daily time frame closed above, and that's not really a great or a strong sign. That's why you want to be careful taking breakout trades. If you do, adjust your stop loss higher as you move into profit. It's a simple way to understand it. That's what we do in our community, and that's what I generally recommend. Speaking of which, CryptoCache.tech is a site. Link down below if you want to become a better trader. We've got some awesome traders over there. We took some profits on our XRP long, and we had a secondary long too as well open for another coin. So it was Litecoin if I recall correctly. Okay, anyways, conversation for another day. Looking here at SUI, just to quickly double check here, we want to recognize 360 is that lower range, $4 is the upper range. So For lack of better terms, $4 is still at resistance based on open interest, and we have support at 360 based on other confirming factors, specifically volume profile, if I recall correctly, for the larger timeframes. XRP as well. 343 is that significant resistance, and 305, 3 even is a rough estimate for that lower support. So we're getting closer to some support levels for certain coins, but the key takeaway here is that XRP is underperforming versus majority of these other coins here. So I would maybe recommend considering not taking along with that coin, or just in general, see how Bitcoin bottoms out first before, because just because $3 is that psychological support for XRP doesn't mean it's going to hold, right? Furthermore, looking here at Bitcoin and of course stable ETH and total dominance here, we can see Bitcoin dominance still kind of below that resistance or previous support turn resistance. This is a good sign for altcoins. So we haven't seen altcoins like completely hemorrhaging. Yes, they're doing poorly, because if you look here, you see the bottom right hand side. This is the total 3 excluding the other 3 that we see on the charts. So the simple way to understand this is how altcoins are truly moving based on total volume. So it was at what, 834 billion yesterday. Now it's at 788. Significant chunk got taken out of the market. But look at this here, an increase in stable dominance. What do you know? Money flows away from altcoins and goes right into stable coins. So that's a standard thing here. What we want to pay attention to is when stable coins start to plateau. That's what we look for. And once we start to hit that top, then that's when you want to try to consider jumping into some altcoins. Okay. So that's kind of where we're at there. We've been seeing what is a good like 9 to 10 day continuation for stablecoin. We may actually see another week or 2 worth of bearish divergence before that shifts gears. Okay. Last but not least here, open interest, no correction, sorry. This is Bitcoin CME futures. On the left-hand side, we can see that majority of that has been filled. There's a wick all the way down to 117.8. So simple way to understand this here is once CME gaps have been filled, the likelihood of the price bouncing and recovering from there is higher. It's not a super significant odds, but it's still something that's relevant to note, because once those get filled, essentially, the price has been satisfied and market makers are content with taking profits because they have a lot left remaining because the market was closed over the weekend, right? So it's actually a good thing here to see that get filled. We can see ETH is unfilled, of course, and I'll go ahead and post these on our Twitter, Telegram, and Discord if you're not familiar. Looks a little something like this. And what we want to look at here is kind of transition over to some backend data and kind of talk about where we're at here with Bitcoin. So getting a foundation of what's the deal here with Bitcoin from a liquidation perspective. And before we jump into that too, we can see top traders are now shorting. And this is a number that changes essentially based on the amount of volume they're trading with. So I think it's over 500 million. There's a certain number that essentially triggers this here to let us know that we have more top traders. The average top trader right now is shorting versus taking longs. We can also see more asks than bids right now. And that's basically telling us people are trying to sell or get out of their positions, essentially trying to get, they could be reversing their order, hit that good old reverse button, or just in general trying to close their longs in profit. Furthermore, here, looking here at open interest on the right-hand side, this isn't super telling, kind of just giving us the indication that, hey, we're in a situation where we have a lot of open interest between 115 as a low estimate, upwards of 122. So this is a heavy interest zone. Simple way to understand it is once we get to that lower range of 115, 116, if that were to happen, that may be a good consideration to average in, because that's where we have a lot of support. Between now and then, though, we can see liquidation delta has officially hit break even. We haven't seen this in over a week. So that kind of implies a shift of momentum. Big surprise, we see the price moving down. Furthermore, this is the last 1 month's worth of trading. Let's actually look at the 7-day, because this is an important factor. The last 7 days, there is still a chunk there, because I know when I sent out my playout chart on Twitter and Telegram, you can see that there's 114 to 117. So hypothetically, a short to the 115 range makes sense, as long as it's a tight short and you watch it close. Or the inverse, of course, consider a long at that lower range once that area has been swept. So once more, that's a little bit more of a macro perspective. Take a look here at the 4 hour, just a quickly note, because we know the daily time frame, we've already kind of talked about some of those divergences there. We can see the 4 hour time frame has some fair value gaps. So I'm not proposing we're going to see an instant recovery, but once we start to recover, we're going to see these gaps get filled as well on the way back up. Okay, at least that's a decent probability. Let's quickly look at the daily though, just to kind of get perspective on the moving average. See, we got some confluence here with this 117K range with the 50-day SMA. Correction, that's the 20-day SMA. the 50s below it, and we got our 0.618 fib level, as well as a previous support or that lower area of liquidation. So this is a good little area here to consider dollar cost average, 115 to 117, or maybe even averaging into a long position if you're considering it. Now, at this point, it's not wise to recommend ever taking a long into a significant downtrend. You've heard the term, don't catch a falling knife. That's essentially what's happening right now. So you're better off trading with the trend. The trend is down right now. But once more, it's not a firm indication because this is more of a fundamental catalyst. Okay, so from a technical standpoint, we got a lot of support in the range that we're traveling into right now. So that's kind of where we're at there for Bitcoin. Let's move on to ETH, see what's going on with this guy here. First and foremost, jump into the back-end data and kind of just recognize where we're at here. With Ethereum, if I recall correctly, there's open interest in the 4,400 range, which is right there, this guy right here. So I think 4,400, we're going to start to see a lot of confluence there. We saw that with our previous high retest as a new low, or potential retest as a new low here. But just remember, 4,400 is a rough estimate there on open interest. Liquidation long delta is still in the green, so we're at about 10 billion long still left, which implies people are still either adding to their position or keeping their positions open, likely because they're in such significant profit. They probably got in at 3,500 to 4,000 range. All that said, we got a tremendous amount of liquidation down as low as 42 to 4,100. That's that heavy concentration. A little bit left here at the 4,400 range. So let's go ahead and double check the daily time frame and quickly recognize a few things here. First of all, there's a lot of fair value gaps on the way down. So I do think Ethereum could very well sell off here soon if Bitcoin were to continue further down. Just know the local fair value gap comes as low as 4,400. That's that lower area. Also recognize too, we had 2 to 3 days worth of trading where 4,400, close approximate of 4,400 was at resistance. So that could very well work as a new support level. So keep that in mind. That's generally where you want to consider, potentially adding to your position there. But once more, there's definitely no guarantees in that, because if we look here a little closer to the 4-hour time frame, that number is more like 43.50, 43.40. We see a pretty obvious plateau here where there was multiple attempts to break that, and a smaller time frame fair value gap here. So I would say the 43.40 to 4,400 range is a better consideration or approximate for maybe DCA or trying to maybe consider a long position. Bear in mind, this all requires Bitcoin to flatten out. As you can see by the look of the market here, most coins, specifically the ones we're covering today, are 1-to-1 ratios with Bitcoin. They're pulling back exactly with it. So that's why we try to identify key level supports so we can either buy those dips or consider shorting to those levels. That's kind of the concept. So ETH, in my personal opinion, is still very bullish. From a macro perspective, we're still looking good, but 43 to 4,400 is a very rough estimate. It would be my consideration for long. Moving on to Solana here, double checking a couple of key factors. Let's look at the back end first and just double check here and see, once again, 177 to 185. That's that heavy concentration of open interest. So that's basically where people have a significant amount of interest in buying or had previously opened. These are limit orders too as well, that includes that. And the concept here is that we're in a good position when we see open interest up below the price. Okay, so that's reinforcing support. So I'd say 178 to 185 is a close approximate. It's a good area to consider some longs. Once again, just shooting from the hip here without looking at the charts, that's essentially the concept for open interest. Liquidation deltas at break even, that usually implies a shift in momentum. And of course, we got liquidation here that's mostly been swept in all directions. But mostly those late longs at 195 to 190, completely destroyed with that candle wick down. So let's look at the daily time frame, see what's going on. Double check, this hasn't changed too much from yesterday, but we can see we're entering a support zone. 178 to 185 is that support range. We aren't quite entering their correction. We actually saw a candle wick down to 186, but the price recovered quickly. So this coin is actually doing quite well. We can see a nice pivot and bounce off that lower range. If we double check here too, though, we look at the RSIs, we can recognize that we're still in good shape. We're over our moving average. Money flow index is right there with the price action. Those are generally good signs. Now, daily time frame, you're not going to see those type of divergences right away. The 4-hour time frame is better at identifying that. So we do see a potential shift in momentum here with MACD diverging, but we're still over 50 on the RSI and we're above support. So if you're going to short, make sure it's a tighter short, maybe from 195 to 200. To that 185 range, right? That would seem sensible there. But generally speaking, trying to short the bottom right now isn't always the best call. So oftentimes I typically try to wait it out to see how Bitcoin responds first and then go from there. Either way, 4-hour time frame still has the money flow index above the price action. even though we have some momentous indicators letting us know further downside is likely, we're still above a lot of moving averages and support levels, and those are more of a impacting favorability for me versus the other way around. So I'd much rather trust these support ranges versus some momentous indicators, because momentum doesn't necessarily hold in trading, especially with crypto. It's so volatile. It's difficult to trade momentum. All right. Okay, take a look here at SUI. Once more, easy to understand, $4 to $4.20 is that upper resistance range with significant amount of open interest. The most amount at $4.05. We have liquidation short delta has shifted bearish, so this is generally a favorable sign for the bears. And then furthermore too, we can see 360, that area of support, and 350 is that lower area of liquidation. So generally speaking, the best practice here when you see that much liquidation right at support is to consider a limit order just below 355, something like that, where the price will probably wick down and continue lower and then just turn right back around as if it never happened. That's if it continues lower, but you can see that SUI is performing poorly versus Bitcoin's pullback here, at least more poorly than the other coins we're looking at. And that's just something to recognize. And this is kind of standard behavior for SUI. Unfortunately, lately, that $4 resistance is quite a strong one there. Okay, so let's take a quick look here at the daily and just double check we're above all moving averages still. So we're not in bad shape. Once more, 360 I still feel is going to be a good support range for us. 4-hour time frame also reflects we have lost 50 on the RSI. So this coin, once more, just kind of reaffirming the fact that we are diverging. Likelihood of further downside is higher. If we get lucky in the 380 to 390 range, that may be worthwhile considering a short in this coin. Once more, keep it tight, try not to get too crazy. But for the most part, a short to 360 or a long in the 350 range seems to be sensible for me right now at this point. XRP, we are in a descending broadening wedge pattern here. We'll talk about that in a second. Let's take a look at the overall perspective here. We can see back in data, open interest, heavy concentration between $2.90 and $3. So that's where we took our last long with XRP at like $2.89, I think it was. Or no, it was like, no, actually I think it was $3 even with our second entry at $2.89. We barely didn't get filled on that one. But the key takeaway here is that $3 support range is been proven to be fairly substantial. Okay, so with us hitting this descending trend line, there's a decent chance we see a pivot and bounce. The only thing I'm concerned with here is we got 1.5 billion in liquidation short delta. That's a hell of a lot for this coin. And we can also recognize too that there's still some liquidation as low as 290. So to be extra safe, an entry between $2.90 and $3 makes more sense. But once more, we may not even see that. It really just depends. But we already saw a candle wick down to 298. So there is that. This coin will run if Bitcoin does the same. But on a 4-hour time frame, though, just to give you perspective here, this is generally a bullish type of structure where the price action works itself into a descending broadening wedge pattern and inevitably breaks to the upside. We have to see some type of higher low first though. So generally speaking, it's going to be something like this. That's where you want to consider getting in. You don't just get in because it's a $3 support range and you love this coin because some other influencer is talking about it. Most influencers are idiots when it comes to this coin. That's a simple way to understand it because they're just regurgitating everything everyone else is saying. So if you trust in them, I'm sorry, you're probably just a gullible idiot. But the truth is, in this case here, there's nothing really telling us that we are at our bottom, minus open interest, which is trustworthy in a sense, but I just don't trust Bitcoin for the moment. And how poorly this coin has behaved in the last 24 hours versus Bitcoin, it's inversely paired like almost 2x. That is not a good sign for any type of long position. Wait it out. Be patient. This coin moves fairly slow in most cases. So I would say you're going to be able to find a good entry if you just wait it out. Okay. All right, folks. I hope that made sense. I described it correctly. Thanks again so much for being an amazing part of my life. Once more, check out Bitunix, awesome exchange. Join us over on Twitter, Telegram, and Discord. And obviously have a great rest of your day. Look forward to seeing you again tomorrow. Take care.